Alex Oral from the Kansas Bankers Association come first and do the presentation for us. So welcome, Alex. Happy to have you here.
Good morning, Madam Chair. Congratulations as well. Look forward to working with you this session. Good morning, committee. For the record, Alex Oral, Senior Vice President of Government Relations for the Kansas Bankers Association. It's an honor to be before you today, and first and foremost, welcome back and wish you the best of luck this session. We look forward to being a resource for you. I'm going to break my testimony into kind of two parts. I'm going to do a little KBA overview. We're a kind of a very different type of association. We're not just advocacy, but I'm also going to take a little deeper dive into the industry. And I know there's a few questions on one specific piece I'll get to when I get to the industry portion of my testimony, if that's okay. But yes, Alex Oral, KBA. I do have a special guest with me. His name is Colton Smith. Colton is a 2L at Washburn Law, working as an intern in our legal department. I believe he started on Monday. Yes. Yeah, so he's baptism by fire coming to the Capitol first week. But Kelly Van Zoll, who many of you know, is participating on a panel somewhere else. She's our VP of Government Relations and staff attorney, and you guys know that that's my other teammate in the building and a fantastic resource for you all if you ever can't find me. Kelly is a lot smarter than me too, so as many of you know. Do represent the KBA. We were founded in 1887. We're the 5th oldest banking association in the country. We're governed by a 24-member board of directors, and it's led by our president and CEO, Doug Wareham. One thing to note about Doug is only the 7th ever CEO of the KBA since 1887. When you think about banking, you think about stability, and we try and replicate that at the association level too. So Doug has the distinct honor of leading a very rapidly growing KBA staff team. We are now at 42 professionals strong, including 15 attorneys that are licensed in 5 states. And we also have 3 Washburn Law interns right now working in our legal department, and with the intent to hire once they finish law school. And part of that is regulatory, part of that is services provided to our member banks to try and sustain the community bank model to the best of our ability. Our mission statement, we just went through a recent strategic plan, so this is new. Kansas Bankers Association strengthens and supports the Kansas banking industry by advocating for sound financial policies, promoting innovation, and fostering economic growth across the state to ensure a vibrant financial future for all Kansans. The Kansas banking sector and industry is only as successful as the communities and customers we serve. If our communities and customers are not successful, neither are we. So we take that mission very seriously to do everything we can to help our community. The KBA, we also represent 98% of the Kansas headquartered banks. So we have about 2 banks that are not members. We're working on them. Those that you know, Doug and I are very persistent, and we're going to try and get them. But we also represent 20 of the out-of-state national commercial banks, or even a bank that has 1 branch in Kansas. And that goes all the way to the largest institutions in our country. But one thing I want to make very clear, the KBA is a 1-member, 1-vote organization. The $13 million institution has the same power as the largest institution in the country in our membership. When we think about policy, we think about hashing out those details in our boardroom, not having that inter-industry fight before policymakers. We want to settle it before we even get here, because there is differences of opinion when it comes to policy, depending on the size of a financial institution. So that's a little bit about the KBA structure, division and services, wide array of services. I'll start with KBA Insurance. You will see our staff in Insurance Committee quite a bit. KBA Insurance is a subsidiary of the KBA, and it's been around since 1900. We offer property, casualty, bond, director officer liability, cybersecurity, health insurance, vision, dental, pet insurance. Anything you can think of. Pet insurance has been a new one. It's kind of funny, actually. But anything you can think about insurance, we provide it to our member banks. On our health plan in particular, our health plan now covers more than 11,000 Kansans, with more than $70 million a year in premiums that go through that program a year. It is the 2nd largest group health plan in the state, with Blue Cross Blue Shield behind the state itself. So very large health plan. So once again, you see us in insurance, there's definitely a reason why. Education and conferences, and I'll give a little tip to the AV. This is where I'll show a video here shortly. KBA's education and conferences, we provide more than 300 training opportunities for more than 4,000 bank employees, from the frontline teller to the CEO and to the bank director as well. We take that very seriously. We have a lot of partnerships when it comes to education and training. I do want to give a tip of the hat to the OSBC. They do a fantastic job for our industry. Commissioner Herndon and his team have an open door, and we're able to work with them on many issues. And we're also working with them very closely on some financial literacy. And I know, Senator Gossage, I believe you had a question about that on Tuesday, and I can't wait to show this video, which is going to be awesome. But Fort Hays State University, we also contract with the university to provide their management services for the Robbins Banking Institute, trying to develop the next generation of Kansas bankers. So we're working with President Mason out there, trying to develop curriculum and attract students to the university. But on the OSBC front, talked about some of their education foundation grants. We were the recipient of those, and we worked on 2 different campaigns, one the family code word, and 2, or play the family code one first if you could, Brennan. And this is what we're putting on TV, social media, radio, trying to educate general Kansans about what's going on in fraud, because it is a major, major deal right now. While he's pulling this up, the second video is regarding banks never ask that. With the evolving technology in AI and voice recognition or voice copying and all that, we have to take significant extra steps, and I'll stop there, but this is the first one.
In 2023, Americans lost $9 billion to fraud.
Hi, Grandma.
Tommy, is that you?
Yeah, it's me, and I'm in trouble, and I really need some money.
Oh, no. Of course I'll help, but first, what's the family code word?
Code word?
In 2023, Americans lost $9 billion to fraud, and phone scams like these are steadily increasing. Safeguard your family by establishing a family code word only known to family members, and verify that code word with the caller before taking any action.
It's just one example of us working with the OSBC on trying to educate. The elderly population has absolutely been targeted, and we hear about these schemes all the time. $9 billion in 23 alone. We haven't seen 24 numbers, but I would imagine it's a lot larger. And if you can pull up this second one regarding banks never asked that, that would be great. Thank you.
Alex, I do believe I've seen that on TV. I don't know where, which channel, what streaming service, but.
We have a great partnership with the Kansas Association of Broadcasters, and actually have the most recent numbers. Over the last year, over 5,000 spots have been placed across Kansas, rural and urban, to educate.
Hello?
This is your bank. If there's a problem with your checking account, I'm going to need your account number and your password to clear that up.
No way. Banks never ask that. Every day, thousands of people fall for calls from scammers pretending to be a bank. If you receive a phone call from someone claiming to be your bank and asking for confidential information, the safest thing you can do is hang up. Remember, banks never ask that.
Appreciate our state treasurer working with us. Couldn't think of a better person to do that video with. And I don't know if he's in the room, but I'm sure he's listening in this presentation. But we've received great feedback on those, and we actually have those in Spanish-speaking versions as well that we're pushing in certain demographics and parts of our state. So once again, educate, 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 and that is in partnership with the OSBC, those exact ads. So, and those are on our social medias as well. Feel free to share them. More than happy to send them to the committee as well. The links, very easy to access if you find them useful. The other major service piece of the KBA is our fastest growing, and that is our rapidly growing legal and compliance department. The compliance department fields over 4,000 legal calls annually from working to apply with state regs or federal regs. And 15 years ago, we embarked on a new venture and created what's called Kansas Bankers Consulting Service. We can actually cross into that next line, providing legal service to our member banks. We currently have 138 of our member banks utilizing this additional service, and actually 10 of those are Missouri headquartered banks. Just last year, we entered into an agreement with the Missouri Bankers Association to take this exact service into Missouri. To supplement the services they're providing to their member banks. They did not have an in-house department like we do. And with the Kansas City Metro being so many banks right there on the state line that are partners and members of both organizations, it just made sense, and we see that growing. And another reason why we have Colton and other legal interns in our team. And then also 2 years ago, or 3 years ago now, we took that another step where we are now actually offering outsourced compliance services to our member banks. In rural areas, it's extremely hard to attract and retain a good compliance officer. You train them up, they leave and go to the big city. And they're expensive. Compliance is extremely, time and sensitive as well as detail. And so we have a lot of them struggling with that. So now the KBA is the outsourced compliance department for 10 Kansas banks. We figured out about one really good attorney can handle about 3 ag banks at once. And to really do it, and that's all they do is bank compliance all day long. So once again, when I say KBA, we're not just an advocacy organization. I am an association professional that happens to do government relations. So heavily involved in a lot of other initiatives at the KBA. The rest of my testimony will focus on industry trends and issues, but wanted to stop there, Madam Chair, if there's any questions regarding the KBA structure in particular. If not, I will move on. Locally, I will, this is a conversation I had with Senator Cluche yesterday. There was some media here locally that put out a news spot regarding interchange. And I will state, last year, there was a complete overhaul of the UCCC. And I want to give a special shout out to Miss Eileen Ma for helping draft that 103-page behemoth of a bill. And it's fantastic work, Eileen. I'm very, very appreciative. But in that bill, there was a surcharge piece to allow for retailers to charge at the point of sale the surcharge or surcharge fee for the cost of an interchange transaction. When you swipe your card, your swipe fee. In that bill, there was no limit on the cap of the surcharge. There was no authorization from the state to say you could do it. So when you go into some retailers, you might see a sign that says charging a 3% or a 4% or whatever on top of your transaction to cover the cost of interchange. There was a news spot here locally that said it was 4% cap. That is not true. They also talked about needing authorization from the state to even do that. I'll state that that is not true. And then there's a federal piece of it too regarding debit interchange. And back in the original Dodd-Frank, it is prohibited to charge a surcharge on debit interchange piece. And we work with our retailers on this piece. As you saw in the videos, there's so much fraud out there. And when you think about the payment rails that we conduct business, and you think about the amount of fraud that can be done regarding a card skimmer or regarding somebody getting access to your card number, banks are fronting a significant cost of fraud. When you think about when a big store has a massive breach and your card's been compromised, who pays for the issuance of all those cards? The bank does. Who pays for the fraud that it's associated with? The bank does. Also, who pays for a lot of the security as well on those payment rails? We do as well. So that's why there is a fee when it comes to interchange. There is data out there. It's like, well, I'll just pay with cash and I'll avoid that. Absolutely, you can do that as a consumer. But from the retail side of things, and I don't want to speak from I'll refer to Federal Reserve data, and I didn't include this testimony because this conversation came up yesterday afternoon, but the handling of certain transactions. It is shown that handling from a retail side, the cash transaction actually costs them more money than the interchange fee. You think about housing it, You think about making sure there's no fraud, no taking off the top, taking it to the bank and the time it takes to reconcile the accounting and everything that goes along with it. The digital transaction is instant, and it is very easy to. So there is ongoing conversational interchange, but I want to state just for the record the news spot that I think was ran yesterday. And if they're listening, would love to clear that up with them as well. It is confusing. There's so many pieces to interchange, state and federal, so I can understand why there would be confusion. So, Madam Chair, thank you for the opportunity to address that piece in particular at the forefront. Moving on to the rest of my testimony, on page 3, I shared a PowerPoint from the Economic Outlook from the Federal Reserve. For the record, I am not an economist. You guys know that. I'm not going to try to pretend to be one either. This is more of a highlight that the Fed puts this out monthly, and the Federal Reserve is a fantastic resource for you all to sign up for free email alerts, access economic data, contact information over there. They are always very, very receptive. But in their December study, a few highlights. They're talking about inflation has come down, but it's still, remaining hot. Near-term inflation expectations expectations continue to ease. Strong consumption's powering GDP growth. Labor market remains healthy, and then they also have a grid where they're showing the projected interest rates cuts on page 10 on the expected into late 26. We do expect interest rates to continue to come down a little bit, but cannot predict anything on this front. But it was an unprecedented growth of interest rates, 550 basis points in a calendar year. We've never seen anything like that before. So seeing that come down has definitely provided some serious relief, but that's affected so many other pieces of our economy. I'm gonna talk about housing a little bit later too. I know this legislature's put a lot of investment in housing over the last couple of years. Unfortunately, we put a significant amount of resources in housing, and then inflation and interest rates went through the roof. That absolutely had a huge impact on that. And if that wouldn't have happened, probably some of those housing policies probably would have got off on a lot quicker start. On page 23 of the testimony, you'll see some of the links here and some of the contact information, including QR code from the KC Fed. Once again, great resource for you. Page 24, you'll see Kansas Bank's economic impact. We employ more than 21,000 Kansans across Kansas that provide services in every single county across the state. And you'll see on this number, you see 210 headquartered banks. Well, you heard a different number from the state bank commissioner because this number is a little outdated. That number has came down to 200. When I started the KBA 6.5 years ago, that number was almost 240. It is a very concerning trend that I believe state and federal lawmakers and regulators need to really take a look at. I don't believe our economy or Kansas is well served if you have 20 large banks. It's not good for access to credit. It's not good for competition. On page, next page of my testimony, I believe it's 25, you'll see a state profile from the FDIC that shows kind of the numbers associated with the health of the industry. Commissioner Herndon said it really well, and Jesse from the OSBC said it really well. The Kansas banking industry is strong and resilient. And one number they look at very closely is halfway down the page, it says Tier 1 leverage. That's the capital on hand. Our Kansas banks are extremely well capitalized. 10.97 is a very good number. And community bank leverage ratio at that, where they're required to have is below that. So we are ahead of that. A little bit up on the general information on new institutions, number in the last 3 years, you'll see that's a 0 across the board for the last 3 years. And it's not just for the last 3 years, it's for really the last 18 years or 17 years. We have not had a de novo or brand new ribbon cutting on a new bank in Kansas since about 2008. No entry into the marketplace. There's a lot of reasons for that. The biggest is federal regulatory standards where they are requiring a significant amount of capital to even start a bank. The number out there the FDIC wants to see to even start a bank is $35 million in upfront capital. In a Kansas rural community, that is extremely high and unreasonable. And we're going to be a lot more aggressive on this piece because when you get that $35 million in capital, you have to deploy that capital very quickly. And if you deploy that capital very quickly, you may be doing loans you probably shouldn't do. So you actually create more, kind of an more unsafe bank that way. So, you should be able to start a bank in rural Kansas. And next presenter, Sean Mitchell, is a real-life banker. I pretend to be one at times, and Sean's a fantastic resource. But, $5 million in a rural Kansas community should be enough to start a bank. So entrance into the marketplace is a barrier right now, and we need to figure out how to change that because we're going the wrong way. You'll see that on also page 20, oh my gosh, it's so small, I think I need to get my eyes checked, 26 of, we call it boiling the frog. Slow and steady until you just kill them. You'll see that from 2001, we had 390. 2021, 213, we update this every 5 years. That's going to be below 200 when we update this again. Once again, wrong trend, and it's very concerning on many factors. What's driving that? Regulatory burden is a big piece. Compliance, also scale, how much it costs for cybersecurity and insurance. Oh my gosh, it is crazy. Those cybersecurity piece is some banks, 11% of their budget they're paying on cyber. So once again, trying to figure out what's best for their communities and provide the best service possible. On page 27 of my testimony, you'll kind of see the alphabet soup of federal regulators, Office of State Bank Commissioner, Comptroller of the Currency, federal banks, FDIC, Federal Reserve, and the CFPB, the Consumer Financial Protection Bureau. Once again, we're heavily regulated. And I'm not saying we shouldn't be regulated. I have stated to this committee many, many times, we're dealing with people's money, it should be regulation. There should be reasonable, tailored regulation. And right now, we do not have that. The Trump administration coming in is going to see a huge change in all of the heads of these departments. We do not expect any of the leaders of any of these departments at the federal level to remain the same. We've also seen some action at the Federal Reserve. Fed Vice Chairman Barr, head of supervision and regulation, recently stepped down from the Board of Governors. Oh, well, sorry, from his role as vice chair, not from the board. There was a conversation that Trump was probably going to fire him or try to fire him, which would have caused legal lawsuits, and so he's stepping down. What that does is create an opening for the Fed Vice Chairman role, and where Kansans should definitely be taking note is that position has to be filled by someone on the Fed board now, currently. It's supposed to be. Now we'll see if President Trump tries to do something different. But one, we have a Kansan on the Federal Reserve Board that was appointed by President Trump and former State Bank Commissioner Mickey Bowman, who is holding the community bank seat. We do believe she'd be a fantastic Fed Vice Chairman and would represent Kansas very well. So be on the lookout for some stuff on that. Not saying that she gets it, but I'm saying you can only pick from a couple people on there. And I think President Trump only had 2 of the appointments on that board. So moving on to kind of the state side of things here, page 28, you'll see the Pooled Money Investment Board holdings. You're going to see some, this is like the worst secret in the Capitol. We've been talking about public funds modernization with lawmakers in the governor's office for multiple years. We had an informational hearing on the House side, a bill introduction last year. We had 2 days of informational hearings, stakeholder meetings between us, the league, the counties, the school boards, the state treasurer. Bottom line goal is taxpayer dollars are coming into Kansas, and we don't do the best job, and part of it's parameters that the law has set, of taking taxpayer dollars and reinvesting it back in Kansas. You'll see the number $8.2 billion. This number fluctuates. I think a month prior it was $9.7 billion. 99.5% of those dollars are invested outside the state. 13% or 12%, depending on the given month, invested outside the country. Not saying all 100% of it needs to come back to Kansas, but I do believe a good portion can. And we've been working with them, and a bill will be introduced next Wednesday on the House side, Chairman Hoheisel, where we have worked with the league and the counties and the other stakeholder groups on a very comprehensive approach that we believe threads the needle on many ways where we're all working together. Really, really excited about that bill. Haven't heard much pushback, I'll be honest, from lawmakers. I will state that. There's been a lot of work put into it and a lot of conversations had over the last year. You'll also see on page 30 of the testimony, the PMIB Municipal Investment Pool. This is part of this. There is an option for local entities, local units of government to go to the government to invest their money if there's not agreeable rate or access to credit at the local level. This pool has grown to over $1 billion, where 20% of our counties are utilizing it, and a lot of our cities and school boards are also utilizing it. It's a great option. They provide great service. But we're tweaking some of the statutes there to figure out a way to not have this pool be this big. This money is going into that $8.2 billion, and then it's shipped outside the state. What can we do to not have them access the pool and have them keep that money locally? And once again, been working with them and have great conversations. Another general industry piece of things, there was a survey done by M&A, on M&A, by mergers and acquisitions by a bank director. More than 2 in 5 bank leaders believe their institutions will buy another bank in 25. It's a lot easier to buy a bank charter than it is to start a bank. So we do believe M&A activity is going to rapidly continue to move forward. Farm debt, total farm debt commercial banks grew by 4% year over year, showing a slight slowdown compared to previous records, and this is from the Federal Reserve. Farm real estate debt growth slowed to just 2% annually. Once again, ag is a major function, when you look at inflation, and you see everything above everything is more expensive. Once it goes up, it never comes down. Commodities is different. Where those do fluctuate and go down. And Kansas is a ag state, ag banking state. Out of our headquartered banks, I don't know the exact number since there's so many less now, but if I had to say out of the 200 headquartered, I would say probably 130 of them are considered ag banks. Maybe 120, but that kind of gives you a gist of how strong the ag sector is here, and we constantly look with that and work with our ag partners on that. Housing as well. It's expensive to buy a house. When you talk to the Realtors Association, you talk about the average age of people buying homes. It gets older and older every year. And that's not good because you talk about equity, you talk about placing down roots. They're getting a lot later start on that than previous generations before. And really, when you think about it, it costs them about 10 years. You build that equity, you can use that equity to start a business, invest. When you don't have that and you're just paying rent, you're handcuffing yourselves. Also, it's a lot easier to move outside the state if you just have a rental. So once they buy a house, it's a lot easier to keep them. And we talk about population trends in this state, doing everything we can to keep the next generation here. And you guys have done a fantastic job passing policies over the last couple of years. Lastly, on a few other things, cryptocurrency, a lot of talk about that at the federal level. It concerns me. I'll just be honest, there's not tailored regulation for cryptocurrency. There's a lot of fraud going on as well with those cryptocurrency machines that you see in malls and other places where somebody will take $10,000 out of cash and they'll go buy cryptocurrency and ends up getting defrauded. We're going to have a conversation with the Attorney General, try and educate him and his office on what we can do to work together to combat that fraud. Once again, there's a lot going on there. But with the new administration, a lot of talk about it. A lot of people made a lot of money, but I've stayed at this committee many times. A lot of people are losing a lot of money too. Another thing at the federal level, and maybe you'll discuss here at the state level a little bit, is marijuana banking. Oh, 1 minute. Marijuana banking. There is pushes at the federal level to allow for the ability to bank legal businesses that are operating in states that have passed. I know Kansas has not, but Kansas has passed laws that allows for 0.03% THC. Well, under federal law right now, if a bank is banking that CBD store or strip mall that's out there, that is in violation of federal law currently. So those legal entities, even in Kansas, creates a very horrible situation where they could be unbanked or not wanting to be banked because of the federal. So we need to see federal change there. Last 2 points, trust industry, significant growth in Kansas over the last 2 years. I want to give a tip of the hat, Madam Chair, Warren and Judiciary Committee for modernization of the trust code and trying to make our trust industry be as competitive as they possibly can. And the proof is in the pudding on that piece, as you heard the commissioner say, or Jesse say 2 days ago, where major growth, major jobs moving here. I talked about interchange as well. I don't need to go there. And then on the public funds bill, once again, a bill will be introduced next Wednesday, and look forward to working with every single one of you this year. And Madam Chair, thank you for the opportunity, and I stand for questions.
Thank you, Alex. Committee, we can take a couple questions. Does anybody have any questions? Senator Haley?
First question on the committee, first time on the committee. Thank you for the overview, Mr. Earl. Appreciate it. And thank you, Madam Chair, for allowing it. Looking at trends that are coming together, my concern, the consolidation primarily of where bricks and mortar will be for that. I've seen some institutions, some banking institutions that have changed. For community service, is there a trend that you look to for the physical locale and how that might be changing in the industry and how it might affect them? Is that a rural or an urban issue within your industry, and how might you adjust to it? There's some kind of
Oh, great question, Senator. Anecdotally, just over the last 2 years, you saw some major institutions, the larger ones, kind of move out of the state to kind of move their branches out. But in urban areas, you're actually starting to see some of those larger institutions start putting up branches and brick and mortar. So I think with the COVID pandemic and everybody thinking everything's moving to a very digital marketplace, and I left my phone over there. I mean, I do a lot of my banking service on my phone because my brother's in Kansas City, and if I didn't do bank with my brother, that would not be a good idea. He'd probably be mad at me. But I do believe the generation still wants to see when they make a big purchase or they want advice. I still think that personal relationship is extremely key. And during PPP in particular, community banking thrived because of that relationship banking. So yes, did we see initial trend a couple years ago where we're getting rid of the brick and mortar? Yes, but I actually think some of that is coming back where people are going to want that personal relationship. On the rural urban, I'll have to do some research on that piece. I think just thinking about my rural bankers and rural Kansas communities, I think people still value that relationship banking side too, and they'd rather have a branch.
Thank you for that insight. Thank you, Mr. Earl. Thank you, Madam Chair.
Sorry, Senator Warren.
Thank you, Mr. Chair, and thank you to the industry for bringing the modernization to our Trust Act to session last year. Appreciate your work on that. Regarding the question, digital transactions and your presentation, the early part of it, and fraud and the commercials you showed us, which very much appreciate the education that you're doing with the public. I think the family code word is a great idea. My question is, this morning in Transportation Committee, we heard about mobile driver's license. So all your driver's license information would be on your phone, on your electronic device. And I'm reading in the news right now, and so talking about fraud and identity theft, which is a concern. And just on Sunday, there was a Topeka incident at a local grocery store where there was a card skimmer that was impacting devices and I think stealing the card reader information, and again, more opportunity for fraud. I know at my grocery store there's digital shopping carts now where the whole transaction is in the shopping cart and you don't interact with a cashier. So my question is the banking industry in that conversation regarding mobile driver's licenses? That's a different bill, but just kind of overall, what's the industry thinking on that?
Very simply to answer your question, no. We have not been involved. Actually, I just heard about that hearing 2 days ago, and I do plan to go back and listen to it. Just my general thoughts. Once again, when it comes to AI and what we're dealing with here, I think we need to be very careful. Don't need to slow technology and evolution of things. But I just think we got to make sure the proper checks and balances are on those things, especially on the driver's license piece of it too. Could I see some efficiencies? Sure, of course, but you're talking about people's identity, and once again, more people are getting their identity stolen, and once again getting defrauded, and I just think we need to be very, very cautious.
Well, thank you for that information, and that the industry will be taking a look at that. I think that's important to hear from you guys. So, thank you very much, Madam Chair.
Thank you. Alex, we have one last question, if you don't mind. Senator Francisco?
Thank you, Madam Chair. I appreciated certainly your being here and the comments that you made about charges on cards. So has there been any discussion, or could there be, about not including sales tax on a cards charge? Because that really does change the playing field for our retailers.
Great question. There was, I think I don't think there is conversations going along at a state level bill on that front regarding exclusions of taxes and tips from being charged interchange fees. I will state the state of Illinois, first state in the country, passed such legislation last year and was actually sued by the banking industry as well as the President Biden administration. So it was very interesting, and so it did go to federal court, and as of 2 weeks ago, there is an injunction in place on that state law. So it is currently being litigated. So as we state in this building all the time, if legislation is being shopped in other states and is already being litigated, we might want to just take a pause or take a breather here and let the courts play out, especially when it's in federal court, because it's really been complicated at that level because it's an injunction for national banks, but the state chartered banks still have to apply to it. And when you think about some of that new technology cost side of things that are going to have to be implemented to bifurcate that, I'm not aware of any software that's out there that does that, but the ones that are going to get hurt the most is actually the community bank side piece of that. And I don't know if that's the people that are being targeted here, but they're the ones definitely getting hurt. And I've stated many times on the ESG type legislation where you're trying to do something and respect it, absolutely, but it maybe not necessarily does what you think it does. It might end up hurting the people you're actually trying to help. So, but I'll be happy to share some information, Madam Chair, regarding that. I actually do have a one-pager on that kind of gives a little detail on that Illinois legislation.
We'd very much appreciate that. Thank you so much for being here. Great presentation. I'm sure we'll see you again. So thank you. You know where we are. And we know where you are.
I look forward to being back. Thank you, Madam Chair.
Thank you. Right now, I'm going to ask if there are any bills to be introduced. Anyone have any introductions of bills? Committee, audience? Very good. Well, okay. Next, Sean Mitchell. Thank you so much for letting us change our agenda around a little bit. Sean's here today from the Community Bankers Association, so welcome, and we're ready to listen.
Thank you, Madam Chair, members of the committee. No problem switching things around. I'm pretty easygoing on all this. I am Sean Mitchell. I am President and Chief Executive Officer of the Community Bankers Association of Kansas. Like Alex said earlier, I am a career banker. I've been in 3 different Kansas community banks, basically all over the state. My last bank job, I was President and Chief Executive Officer of Farmers and Merchant State Bank in Wakefield, just outside of Manhattan. And then 17 years ago, they needed someone to run the Community Bankers Association, and they hired me. So now this is my 17th session representing the industry here and running the association. So I come with things. 17 years, I still don't speak like a lobbyist. I'm a banker. That's how I think. I'm analytical. I will give you graphs and charts because that's just the way I think and see. But the CBA was formed in 1978, and we have about 40% of the banks in the state belong to us. Every one of our members belongs to the KBA. What we are is only Kansas-owned and operated local banks. None of the large national, even regional banks, they're not even allowed into membership with us. So we're almost a subset of that. And my main charge is to only watch for things that might hurt the local community banks. So here at the State House, you'll hear us and the KBA, we're going to be together 99.9% of the time because they do represent the same ones and they're very much in league with us. We do the same thing. Where we get a little difference is when I go to DC because there's massive differences and I only represent our people. So that's where you'll see the differences. I've explained it numerous years down here. I'm basically the watchdog for the local banks. You're not going to hear a lot from me. We're a very small staff. We're a staff of 3. So we wear tons of hats. So we use the services of Little Government Relations, Stuart Little, Mallory Lutz, Mallory's back here. They're taking notes, doing everything for me because I can't be here because I've got to be on a plane somewhere else. So we've always got someone here watching and listening, but most of the time you're going to notice that we're always together. With this, I have provided, I will not go through this because in interest of time, I prefer to be short, concise, but it's an analytical report from September 30th 2024. It's the most recent information that's out there on Kansas banks. It's only Kansas qualified community banks, and it compares them with each other, as well as how they rank nationally on lending, what their portfolios look like, what their financial health is. So it just gives you kind of a flavor of what the position our banks are in. It goes along very well with what the Bank Commissioner's Office presented the other day. I do a lot of, it includes state chartered banks and nationally chartered banks and compares them with all of their counterparts nationally. So I think it's just always good to know our banks are healthy, why they're healthy, and what they're doing. And if you have any questions, you can always get a hold of me. My contact information's here, or I recommend talking to the bank commissioner. That way you know you're talking to a regulator and all these numbers, what they mean. So with that, you will see me a little more this year just because we are working the bill with the KBA, hand in hand. We're co-branding everything on that. But I'm here more just as a support. Again, I think banker, I talk banker. That's what I am. So I thank you for the opportunity. Always available if you need me for anything.
Thank you, Sean. Committee, do you have any questions? I do appreciate the PowerPoint with all of the data in it, and I do like bar charts and pie charts. I mean,
I like colored charts. It makes
I do
sense
too,
to
and
me.
color too. Is there anything in this PowerPoint that you gave us, this quick analytics, that you think is important for us to know? Is there any piece of data that you think is critically important? I know the banks are healthy, but is there anything, any trend piece that we need to be aware of? Is there anything you're worried about?
I'm always worried. That's my banker hat. I can't help it. I'm always worried. The consolidation is a huge issue. Alex was saying almost 300 banks when you started. I started in 1995. Almost 700 charters when I first started. My first bank was the Bison State Bank. We were $6 million. $6 million. That's it. Smallest bank in the state at the time. We had 4 staff members. That bank still exists, actually. They've moved their location and they're in Johnson County. But to go from almost 700 charters to 200, that's massive. And it's a lot of reasons, but the compliance burdens, our banks are dealing with it. They're finding ways, but it's hard to staff these sort of banks. And that's not a thing you're going to notice in these trends, but staffing is one of the biggest issues we have as an industry, and succession planning. I mean, I'm gray. We're all getting older, and trying to find people who want to come back in and run their local banks. So that is the biggest issue. When you look at the financials, our banks they're extremely healthy. They know what they're doing. They're conservative. Their lending is good and strong. Their capital ratios are good. It's what's going to happen with financial regulation and finding the staff to take care of that. That's the thing that keeps me up most at night. It's not downturns in ag or real estate. Banks deal with that all the time. They plan for that. It's these other things that kind of bother me.
Thank you. Senator Argabright, you have a question?
Thank you, Madam Chair. Thank you, Sean and Alex. My question is first-time homeowners programming. Is that available? Is it consistent across the state if it's available? May not be a simple answer. But from bank to bank, is that available to our?
Absolutely. There are a lot of programs with FHA, VA loans. Those very much target first-time home buyers because they're low down payment loans, sort of thing, that most every bank that I'm aware of they have access to all of this. It's whether they choose to use those or not. But most have access to that, and that's where you'll see a lot of the first-time home buyers tend to go into those programs. There are all sorts of programs that some are used, some are not. It just depends on the complexity of it. When you're dealing with a first-time homeowner, I remember my first loan, actually my first home loan, I won't even tell you when, it was so long ago, but it was like 10 pages. Now it's almost a ream of paper, and that gets confusing, and that doesn't matter if you're a first-time home buyer or a seasoned buyer. But there are numerous programs, and every bank in the state that I'm aware of uses those sort of things, and they're widely available.
Yeah, thank you. When Alex mentioned the age keeps rising, that's part of my question, just to get a little background. So thank you for that.
An example, my oldest son is 32, just bought his first home 3 months ago. I bought my first home when I was 20, 21. So it is changing, but everything's kind of changing that way. But it is concerning because that's how most Americans gain their financial wealth, is in their home. That's because it's almost a forced savings plan, getting equity in that. So I would sure rather see those numbers go up, primarily for that.
Thank you, Madam Chair.
Thank you. Senator Haley?
Thank you, Madam Chair, and thank you for the presentation. A similar question that I asked Mr. Oral. Beyond staffing, which you've alluded to, in some of the, smaller communities, is consolidation of the bricks and mortar, of the actual access, the personal touch, if you will, from our banking. Has there been a trend or a change? I mean, you mentioned the downsize in charters, but the consolidation of where people physically go. I mean, because of staffing, because of changes in the industry, AI and what have you, is there something in the industry that you see from the community banker standpoint that speaks to the future of how accessible the industry will be, where to physically go, or is it trending elsewhere other than beyond staffing?
Absolutely. I think Alex covered the urban area pretty well. I mean, you saw the big ones pull out, and I've always picked on that because it just drives me crazy when you see these empty bank buildings. Well, in Topeka, we've got quite a few when you've had the mergers where it doesn't make sense for them to have banks on the opposite corners of the intersection. So those go empty. But that doesn't really change how it's servicing the community because there's still that bank real close. So urban, you see that, and I do see some new bricks and mortar coming in urban. Rural, it's usually different because we have so many communities that only have one bank in them. But the trend is when there's a merger of equals or however this transpires, they seldom close that location because it's all about the community and the involvement that they have. So typically, they're leaving those open. They may change their staff numbers a little so that they can get the economies of scale, but they very seldom close that physical location. And what I've seen happening recently, we had some legislation passed several years ago to allow for ITMs, the interactive teller machines. And that's what we're seeing used more and more, especially in rural areas where it may be 45 miles to get to this location and they can't staff it, but you can walk into it and it's like a booth and there's an ATM there, but it's an ITM. And you hit a button, and all of a sudden there's a live teller who's sitting 45 minutes away from you. Well, hello, Sean. How are you doing? What can I do for you today? And that is very common in our rural areas. And I've seen those pop up more and more where those local banks are actually expanding their footprint by using that. And then they see, does it justify, okay, do we actually put physical bodies in these locations? And I love it because it's a great use of technology that everyone's comfortable with. It's not just punching on a keypad. I can actually see somebody and talk. So that's how rural is starting to deal with those. You still have that very high-touch personal banking, but they found a way to make it economical and use fewer staff, which is always an issue.
It's great for customer service. Thank you very much. I appreciate it. Thank you, Madam Chair.
Senator Rose, you have a question? Yes.
Thank you, Madam Chair. And thank you. Is there anything that the Kansas legislature can do to create new startups, new charters, or is that entirely a federal issue?
It's unfortunately a federal issue. It has to do with the capital requirements and, of course, getting your FDIC insurance. So the capital requirements, which KBA talked about, are just egregiously high. It just makes no sense, and it's very difficult to raise that kind of money. It's a federal issue that we have to get them to change because there's no state issue that I'm aware that would affect that at all. It all has to do with that federal charter, and it just kind of locks us out like we haven't had a charter. When I was first in banking, it was like every year you'd have numerous de novo banks, what they're called, but we just haven't had them because of that barrier to entry.
Follow-up. Yep. Do you have any optimism that the incoming Trump administration is going to make it easier to create new banks in Kansas?
I always have optimism. I don't care if it's RD, makes no difference to me. I think if there's someone going to shake something up, that'll probably be who does it. But it's more of a bureaucratic issue in my mind because you're dealing with regulatory agencies, the FDIC, the OCC, I'm sorry, federal, the FDIC, the OCC, that's the national regulator. All of those, the Federal Reserve, they all have to agree. And we all want safe and sound banking. I would never go against that. But you kind of have to get all of the agencies to agree, oh yeah, we're going to make this change. And it's not so much politically driven, it's because of the regulatory agencies themselves doing this. That I don't think a change in politics is going to really do much on that. It might open the door to say, hey, we need to have some serious talks about this, because nationally, both of our national affiliates, we're affiliated with the Independent Community Bankers of America, are pushing for that barrier to be dropped constantly. So hopefully we'll gain a little bit more ground, but it's just a regulatory issue.
Thank you. Thank you, Sean. Thank you, Alex. Appreciate you coming to the committee today. Committee, I just want to remind you, Friday, we do not have a meeting. We don't have one Monday because it's a holiday. Tuesday, we have presentation from the Kansas credit unions. Wednesday will be capers, so drink your coffee, come awake, wide-eyed. Thursday, we will have 2 hearings and a presentation from the Kansas Insurance Commissioner. On your agenda, you're going to see, it'll say informational hearing. It's only because we just don't have those bill numbers yet, but we will have, and we'll get those to you just as soon as we've got them. Going in today. Okay, very good. So, and that will be our schedule for next week. So if you have any questions, just let us know. Have a great weekend if you're not here tomorrow. So thank you all. Committee adjourned.